we have a 22-year trading veteran with us today, Ali Crooks.
The amount of traders I speak to will say, my strategy doesn't work. I'm like, well, define what doesn't work me. Is it that you've had a 4-trade losing run? How often does that strategy have a 4-trade losing run in the last 2 years? And no trader answers me, 6 times. I say to traders, lean on your data. It's not that backtesting or real trading data is the holy grail. Backtesting or data gives you a perspective on what the market has done. And I ask questions when I talk to groups of traders. I say, what do you think statistically happens to your win-loss ratio when you've been in the game 10 years? Do you think it stays the same, goes up, or goes down? And 95% of an audience I ask that question to say it goes up. Mm-hmm. And the statistics show the opposite. It's actually what happens as you build resilience, your ability to deal with losers increases. So you actually then start tolerating losers more, and it's actually your risk to reward that goes up. So traders that have been in longer tend to have better overall risk to reward ratios and actually lower win-loss ratios. And this is one of the things I really try and get across to other traders is I don't sit there because I've been in the game 20 years and not have the thoughts. I just have the thoughts as whispers and I don't act on them. So, and I think that's really important for young traders to see. And the art of it is the art of trading is not to not have those thoughts, it's not to act on them. And a lot of the time when people read those books, they're in phase 1, which is interpretation. So they're interpreting it and they're, like you said, they're understanding it logically. And then when they go into phase 2 implementation, that's without the experience. So it's easy to forget what you read, or, because you're then consumed by the fact that you've had 4 losers or you've failed the prop firm challenge. And that becomes the thing that's in front of your mind. It's when they then, and a lot of people at step 2, when they're interpreting, they'll strategy hop, they'll give up, they'll go away, it will go down their list of priorities, or they'll look at real estate or drop shipping and they'll get distracted. If they can get into realization phase, so if you're more type A, you're more left side personality, usually it's going to be an overtrading tendency. So if you have a losing run, you're more likely to respond with overtrading. If you're more analytical, you're more on the right side of the quadrant, it's probably going to be 5 losers, what's wrong? And then you're back burying your head in your data or trying to find a way to change the strategy. So it's, again, that realization isn't the same for every trader. There's 2 elements to it. So just to caveat, my best performing trader that I've worked with had never had any experience before she came to me. Really? But the problem is a trader in a similar boat that's got all of this, like you said, trauma or baggage. Some of them don't know which way is up. And it can also manifest technically. So I will often, with a trader with experience, I'll give them really simple technical analysis diagrams. So just take this chart, follow this process and find the key levels of support and resistance. And then they'll be like, yeah, but I don't support and resistance. I use supply and demand. I'm like, you're missing the point of the exercise. And the exercise isn't that you have to use this. I just want to see how easily you can look at a chart and identify and do one thing simply. If a trader can really step back, and what you said earlier I think is really important, is look at that 20%. So I'll say to guys, look, let's say you've got trader A and he's had four losing trades. 5th trade comes along, and because of those 4 losers, that it's gone into fear mode. It doesn't take that 5th trade because he suddenly sees the support and resistance that means he can't get his 3-to-1 target, so he's not going to take it. So he's found something technical to excuse him from the trade. And then you've got trader B over here, same 4 losers, takes that trade. So trader B in that moment gets the 3-to-1, they're down -1. This trader doesn't take that trade, then goes into revenge mode, takes the next trade with 2% risk, suddenly they're now down 6-7R. This trader's almost at break even. That was one decision that has created a 5R differential in that result over the short term. Yeah. And it's those things compounded that mean that trader A by the end of the year is minus 10 and can't understand why. And that trader B is up 10, up 20 and is in that place where they're building confidence rather than losing it. Let's say I've got a 5R target on a trade and I can see that the market is stuttery and we've got a whole series of news coming out, and that news comes out a little bit positive, a little bit negative, then I'm expecting that 5-to-1 target, if it gets hit, to take longer. No, it might not, because the market might just choose to go there. But if I've got an expectation that is a better time horizon, somebody who's like, oh, if we get that news announcement, that means, and it goes that way, price is going to hit its target. I'm already in the driving seat compared to that trader. So for me that's probably it. So yeah, I'm a little bit contrarian. So a lot of the time I will actually weirdly feel better about a position I'm in if I'm reading a series of analysts' reports and they're saying the opposite. And again, I can't prove that. I'm not tracking that, but I think I will take the data of my strategy over the last 5 years, even though market conditions change over that period. I'll lean on that a little bit more than, well, I think Powell's going to say this. Oh, he has said that, therefore I'm going to do that.
Yeah,
I think that's where I go. So I don't ignore it, but I don't put too much emphasis on it. It's more. I think it's more for me in the strategy. I think the thing that I will look at a little bit is it's more technical, but I like retail sentiment. So again, if I'm looking at a position and I see sentiment coming in my retail sentiment as a contrarian indicator going, so I say I'm long and more retail are going short, I don't think, right, I'll double up on that trade or I'll hold it for longer. It just makes me go, okay, that's more weight in my direction on this trade. And I think if you can see it almost as two separate tasks, you're then ahead of half the people out there that are doing it. I always say, if you can sit once you're qualified and have the patience of a saint, or the patience of 1% of traders out there, and you can get to £1 million of hypothetical funding or whatever it is, then that 10% payout is worth so much more than the first. But I think the thing that kills people, yes, there's obviously a percentage of people that don't make it past the qualification. It's phase one, because they want the first payout.
Yeah.
I spoke to a guy who's like, I paid my mortgage off, I worked shifts. He said, if I can get to payout one, that will cover my expenses for an entire year. And I'm like, it's over already, because you're thinking about that. So I think in the prop firm space, if people can think at longer term, just like we talked about for any trader, they've got more chance. There are other avenues. So I have a regulated managed fund. I'm not regulated myself, but I come under an asset manager that does. So the way that worked is they actually contacted me. I've been doing it 4 years. They probably contacted me about 8 years ago. And for me, I was like, at that point, I was like, I don't think I want to manage other people's money.
Yeah.
It wasn't for me. And then they kept hounding me, sent them my track record. And then I said, yeah, all right. So I think it was June of 2019 that started.
A lot of people aren't focused on track records, and I think it's so important. Would you say, in terms of track records, though, is there an element of the capital you trade as well, like in terms of size?
Yeah, I mean, I've taken it out now. I initially put 150 of my own money in. So I put 150K because I didn't want to be that guy that was, trading $2,000 of his money, but had $1 million of other people. I wanted the traders that were coming in to know that, he's got his own skin in the game on this particular account, not just in his own trading. So I think, yes, it is. And one of the things that I talk about with my traders is there's that phase when you get to personalization, phase 4. It's not just about what you trade and how you trade, it's the size you trade. So it's a different ball game. Some traders do better with big size. I've worked with a couple of guys that I said to them, you actually are trading too small relative to your income, because you're just flippant about the fact you've lost 100 quid today because you're earning 500 quid a day as a consultant. You're like, I can just lose this. And actually when they up their account to 25K, they became better traders because the loss was more severe. Yeah. So that's one angle. So I like trading with bigger money. But I've grown into that. It's not that, if I'd started with the money I trade now in the first 6 months, I probably would have crumbled.
But traders do you tend to work with in terms of age and
it's so varied. I mean, like I said, Kerry, my best trader, she'd never seen a chart before in her life. She salt the earth. She worked a business. I think it was printing or packaging. She did, sort of came to me in her late 50s. And I have other people, 18 or even younger. They can't actually open an account, but they just want to learn to trade. So it's very, very varied. And the one thing I've learned is it's easy to underestimate something. You can look at something. I remember working with a lady called Christina, and she won't mind me saying this. She was a graphic designer, very creative, and initially it was a car crash. But she had so much determination that she got there, and nothing out of this world. Few percent a month, just some simple swing trading. Still doing it now. But even I was like, I remember saying to Sarah, my wife, no, I don't think she'll make it. And I was like, and then she did. And I was like, I'll never write anybody off as long as they're taking feedback. I think that's the key thing.